Well, here we're looking at the Dow. We saw a very huge move to the downside today, and this is one of those situations where we've been talking about prices really close to the time and price. We were talking about the fact that near 18,000, we were very likely going to see some significant resistance. You could see our target, we hit the high of 18,100, only 100 Dow points past that, but you could really see prices not able to really hold that up as you start to see this on the week. Over the week, we started seeing things come down and start to go through some significant sell-offs. Now, I think one of the most important things I want to specify and let everybody really make sure everybody's very clear about is that I've been talking about this market being way overextended for some time. I think you're starting to see the market really come in and really hit some significant targets. We talked about this some time ago, so I don't want to hear some people's thinking, well, you didn't call this move today. It really broke down. No, well, I might not have, but I did call the range that on December 18th, saying we'd see a retest of this range on the S&P to the 2090 to 2100 range, and we hit 2093 on the S&P, and we also hit 18,000 on the Dow, very, very close to that target. So in reality, when the price hits, that's major resistance. Unless you break that, you're seeing some resistance. That's just the way technical analysis works, and that's not just to cover ourselves here. That's just the way it is. You only have certain amount of area to really move here. If you're looking at this target, you could see how it's hitting the high ranges of this target, and it's been going for some time. And that's another very, very important point I want to talk about. A lot of times people are so concerned about what do you do as far as what your picks. I think we've done really well, actually, when I'm thinking about it. I mean, we got an overall 630% return for the year. Very pleased with it. Now, and considering, over 5 years, I think it's over 500%. Now, what I'm really like to do is to give you a tip of what's going on with this overall market in general. I think we're starting to see a very, very significant cycle that's coming up here, and I'm going to show you what I'm talking about. Here we had a prior range. This was the dot-com boom right here, the first target. This came up into 2000. Right? And then we saw this big dot-com bust. Now, it may not seem a lot here, but that was a very dramatic thing for people. If you look back at the leg, that was a very, very huge leg back. If I went here, you could see what I mean, the significance of that. Okay, so we have this very, very big bull move, and then we have that correction of the dot-com. We see the next gasp higher here in the real estate boom, and then we see this big collapse. Now, it's not going to be a big surprise for those that know me and my work and have been around that. I was very pessimistic on this move up, and very good reason too, because we were seeing some very significant correction action. It really had to prove itself that it was going to rally higher and just not be a reactionary move off this main move, and that was a big premise of what it is. But basically, what my concern is here is that we could be looking at a very significant 15-year cycle from the major 2000 high here, and that is extremely significant. You have a 15-week move, a 15-year move from here to here in the top, and I think we could be really seeing a very sizable move coming back, possibly into 14,000. I would be watching 15,000 first, but there's a potential going as deep as 14,000. You would see the bounces coming on at several different locations here, but I do think we see this go down to 16,000, probably see the bounce back up, eventually try to test those ranges, but if they get broken, I think we go back down to 12,000 or maybe even 11,000 back on the Dow, and maybe even much, much lower, because I think this could start to be really the end of this move, of this reactionary move. We are extremely overextended, in my opinion, and the downside has a lot more probability, and we're starting to see that move start to take place. Now we're going to move this into the daily so you can kind of see what's going on, but you could see on the extension, on the Fibonacci extension I have here, if we look back on this target, you could see the Elliott wave here counts. You could see your 1, 2, 3. You can also see the 5 wave coming in here. 1, 2, 3, 4, 18.5 on the target. Now you're starting to see this correction action, but in my opinion, I really think we're starting to see that overextension. Also, you see the Fibonacci extensions I was just talking about. You could see them coming in from here, and then they start to extend. You see a lot of them in that range of the 18,000 and up in this target. I said if we broke the 18,000, maybe 19,000, but I felt we were really, really at the end of the road here. I firmly believe that. I don't think there's a lot more room left in this marketplace. Like I said, possibly a last gasp to 19,000 if they get a little more energy. But I think within this first quarter, I think we could see some very significant potential moves to the downside. And that could be extremely bearish. Let me move this over. I've been missing that. Okay. I think that could be very, very bearish for us here as if this starts to continue to go, because people will start to realize that, we're seeing some significant move to the downside. We're going to continue this on another chart here.